It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. And welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Wednesday, midweek edition of the show. Hey, thanks so much, everybody, for making RealAg Radio and Rural Radio 147 a big part of your workday. Also, of course, a big shout out to everybody listening out there on the RealAg Radio podcast. Well, it's Wednesdays, and what we try to do on Wednesdays is we try to take a little bit of a look at the markets. There's a lot happening right now. We had a USDA crop progress report, crop condition report come out this week, and it's if you're a bull, at least in the short term, this crop's off to a very, very good start. Actually, one of the best starts in the past 2 decades. So 75% of the U.S. corn crop is good to excellent, the top category. Only 4% in the bottom category. So that's not good in the short term if you think the market's going to go higher. But how do we adjust our marketing plan? Our guest today will be Ranulf Glanville. He is a market analyst with GrainFox, and he's going to try to shed some light. So we're going to focus on corn and soybeans, and then we're going to transition to wheat and canola today on the show, because there's 2 different stories there. If you look at wheat, a little bit of a different fundamental shift happening there. Of course, we got the situation in Russia on top of a whole bunch of other things as well. So I'm looking forward to having the conversation with Ranulf. We haven't had him on the show for some time. We're also going to have some time today for some of your emails. Now, yesterday, we heard the Ag Policy Connection podcast talking about the future of ag extension and knowledge transfer in our industry. And we got emails from across North America. So I want to talk about that today and give some of your feedback, because there's some interesting differing perspectives. I'm not saying representing different areas of North America, but just 3 different thoughts. And so we'll go through those today on the show. We'll also have time today for the top ag news stories of the day. And I won't surprise you with what the top story is. The Bank of Canada has made a decision as it applies to interest rates, dropping 25 basis points, as was the common thought. 65% of analysts predicted that we would see a drop, and that's exactly what we got. What does this mean for currency exchanges? What does this mean going forward? And is this just the beginning of many drops for the rest here of 2024? We'll dig into what analysts are saying now that the decision has been made, along with a whole bunch of other things as well. If you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. Of course, you can also find Real Agriculture across all the different social media platforms. Also, you can call the RealAg feedback line. That number is 855-776-6147. Today, I'm broadcasting from Guelph, Ontario. I am on the road. One of the common questions is, hey, how many days are you traveling? It's a lot. I was in Halifax, Nova Scotia earlier this week, and I'm in Guelph, Ontario today. Tomorrow, I'll be with CAFA out in Stratford. So looking forward to that trip. Going to be doing a live broadcast of the show at their convention, and it'll be broadcast here on Friday. So no RealAg Issues panel this Friday, but a great, we're going to talk about issues. It's going to be a different kind of issues panel. So you're going to be able to hear that on Friday here on Sirius XM and on the podcast. Now, when I was a story I didn't tell you, when I was in Halifax, I got there on Sunday night, and it turned out there was a big tour bus that I was staying at the Marriott Harbourfront in Halifax, which is a great hotel, great location. And if you've never been to Halifax, highly encourage it. Tons of Canadian history, of course, as well as pretty much a tavern, a pub, an Arms on almost every corner in the downtown. So it's my kind of place. I could spend a week there just going pub to pub to pub to read some of the history and things like that. But anyway, so tour bus pulls up, and a guy comes out. You can tell that this, you wonder who it is, right? And it wasn't like 3 tour buses. It was just one. So you kind of wonder what's going on here. And so you go to Ticketmaster, you look, and it's Snoop Dogg's in town. Well, looky here. So I never did get to see Snoop Dogg, but he was performing on Monday night, and I was meeting some friends on Monday night for supper after I'd gone on a bit of a tour of Nova Scotia. It made it out to Peggy's Cove and all that kind of stuff. So we're having supper at this pub. And the waiter tells us, well, you guys going to Snoop Dogg? No, we're not. We're just, just visiting and having a pint and some fish and chips. And he said, well, hey, just to let you know, the after party after the concert is upstairs in the pub. People were paying $350 to go to the after party. Not sure what would be better, the after party or the concert, but it was lined up down the street. And the other thing that you notice is it was crazy, all ages. From basically like 17 years old. I actually saw a guy who I'm not exaggerating, was like 85 to 90 years old in line to go to the after party. So quite the age demographic going to Snoop Dogg's after party, but I'm sure it was a lot of fun. So, okay. It would have been neat to run into Snoop Dogg. That would be a really, really good reel or like selfie. That would be sort of by chance, but definitely very, very popular. But you must love performing if you have the kind of money and endorsements that he has, and you're still making your way across Canada, doing a Compton to Canada tour. I think that's what they're calling it. So very cool. Very, very cool. Let's take a break. Let's get to some agriculture. Enough about rap music. Let's get to some agriculture. And when we come back, we're going to be talking to Ranulf Glanville, and we're going to talk about the markets. We're going to start with corn and soybeans, and then talk wheat and canola right after this.
Hey, Sandy.
Mike, nice to see you.
We're meeting next week, but I just wanted to ask, who would you recommend I talk to about financing my operating expenses this growing season?
Easy. Call CCGA. Their APP cash advances are flexible and can save you thousands in financing costs. You can get up to $250,000 interest-free, and anything over that is below prime.
Great idea. I'll call them tomorrow.
And check out ccga.ca.
Cash advances are made under the Government of Canada's Advance Payments Program.
I get to spend every day talking to farmers in the ag industry through RealAgriculture.com and RealAg Radio. But nothing is more fun than speaking to an audience live and in person. If you're planning an ag event, book a Real Agriculture speaker to make it a successful and memorable experience. Email shaney@realagriculture.com and you can book myself or any other Real Ag personality to speak at your event. Bring your audience all the fun, insight, and energy of Real Agriculture.
Peter Johnson at WheatPete, RealAgriculture.com, and what an opportunity! Oh my gosh! You think you can't grow better wheat? You are absolutely wrong. We're going to show you how to strive for those record wheat yields that they get in the UK and in New Zealand. You can grow 150 bushel wheat. I'll show you how.
Catch WheatPete's Word every Wednesday on RealAgriculture.com or download the podcast on iTunes or Spotify. And welcome back to Real Ag Radio. It's time to talk markets here today on the program. This segment's brought to you by AgZone Bin Logic. It's a grain monitoring solution designed to transform the way growers manage their grain storage with streamlined installation, subscription-based pricing, and adaptability to your farm's needs. Speak to your local co-op agro center expert today about AgZone Bin Logic and see how we can help you protect your yields. As I mentioned, we're going to talk about the markets here right now, and we're at a really interesting point. Of course, this week we saw USDA crop progress report. That's having a definite impact on the mood in the markets this week. But there's a lot to talk about the overall commodity complex. Joining us right now is Ranulf Glanville. He is with GrainFox out of Ontario. Hey, Ranulf, how's it going?
Fabulous. Pleasure to be here.
Yeah, it's great to chat with you again. So I guess let's start with corn and soybeans. And we had the crop condition report south of the border. Of course, corn is king when we look at the markets, and it does drive a lot of the sentiment that is out there. 75% good to excellent across the corn belt. What's your reaction to that number?
Well, I think my reaction is what the market's reaction was, and that's a negative number in the sense of weighing on prices. When I sort of look at the USDA report that came out on Monday, the main message is corn planting ahead of normal, corn emergence ahead of normal, and that very strong initial crop rating, which you referenced. And so I think really what we've seen is the concern about the U.S. corn crop that might have been there a month ago when things were really bogged down in the deep south in Louisiana and places like that, has dissipated because now we've got the crop in the king states of Iowa and Illinois and even into places like Michigan and Missouri looking very good for this time of year.
Yeah. It's not how you start, it's how you finish. I've heard some people talk about how the later planted corn, we'll see how it emerges, because obviously we're only rating what has emerged at this point, and we still have we've still got some acres to come out of the ground. Is that kind of the only hope for this to kind of go sideways here off the beginning?
Well, I think in the very short term, you're likely to see continued sideways to lower trade, yes, because we've now reached sort of the stage where it's early June and people are saying, what's next? Well, what's next, really, for the most part, notwithstanding what you said about some areas of patchy emergence, is yields. And we won't know about that until usually the July 4th timeframe in the US is when you traditionally think of, okay, let's get excited about what's happening with yield potential. So that's still a month away. And in the interim, in the absence of anything fresh and exciting, what you're likely to see is maybe some chart-based selling. The large funds, which are in and out of these markets, covered about 3/4 of their short in corn in the spring. That helped fuel the rally. And then in the past couple weeks, they have started adding to those shorts again. So that is weighing on the market, in addition to what you're talking about, this fundamental news about the U.S. crop.
Yeah, I was just going to ask you about the managed money and the fact that we are gaining in net short position in that area, and just like on the upside, where sometimes we blow past where we would fundamentally think the market should be or could be. We see that also to the downside, and this is the timing right now, the scenario where we really start to complain about those funds and then pushing the market around. We like it on the upside, not so much the downside.
Absolutely. I work with Neil Townsend, and he's a great fundamental analyst. And one of the things we always talk about is the funds don't make the market. They don't matter more than the fundamentals. But in the short term, the funds can move the markets more than you might think based on the fundamentals alone because of what you talked about, money flow, which is a big factor in a lot of these markets. And when it's going in your favor, everybody loves it. And when it's going against you, as it has been over the past couple weeks in corn, then everybody gets up in arms about the funds being in there in the first place.
Yeah. Any thoughts on the condition of the Ontario corn crop or the rest of what we see in Eastern Canada?
Yeah, that's a great question. I think unlike the United States, where there's really no concern, Ontario is very much a case of haves and have-nots. Did you get your corn in? And the answer, if you were on some lighter soils, is generally yes. Is it up? Is it emerged? Is it looking pretty good? The answer is generally yes. And all the rain that we had in this, up to this point is actually setting the crop up quite nicely, given that you're going to have some buffer against drought. It doesn't mean that if it's scorching hot in the first half of July, that there's not going to be concerns about pollination. But what it means is things look good if you got your corn in. If you didn't, if you're on those heavier soils, and there's certainly some areas like that, what we see is people didn't get their corn in, or they didn't get all of it in, or they're thinking about maybe switching to some soybeans or some shorter season varieties. So it's very much more of an uneven situation across Ontario.
Yeah, I had a grower call me yesterday and said he hadn't even planted an acre of corn yet.
Yeah.
How far should he drop his heat unit, or should he just switch to soybeans entirely? Of course, I passed him on to Peter Wheatfeed Johnson. I am not going to provide that kind of agronomic advice.
That was good advice. That was very good advice indeed.
That's pretty good. Any indications, or what are you hearing, thoughts on when we do get the U.S. soybean, the first crop condition report for soybeans next week? What's the expectation there?
Well, I don't have a number offhand, but I think the expectation is very similar to corn, which is a strong initial reading, likely to confirm what people are already thinking. I don't think there's anybody out there at this moment who's too concerned about soybean acres. Soybeans tend to be a crop that are planted after corn, so there's still soybeans going in, but really at this stage, between the combination of still having time to get soybeans in, lots of soybeans already being in the ground in the U.S. ahead of normal, emergence ahead of normal again, hard to imagine the crop rating being anything but quite historically strong. Meanwhile, those last few corn acres in areas which are wet, some of those could get switched to soybeans. So that initial crop rating won't tell us anything about that, but that's something to keep in the back of our mind as we move through the end of June USDA reports and further into the summer.
So, Ranulf, with all this being said, and in the really good start from an agronomic perspective, maybe not from a market perspective, from an agronomic perspective, we're off to a very good start south of the border. Corn and beans really do drive the market. How does this impact your marketing plan? Like, what are some of the considerations you need to have right now? And obviously, there's a huge wide variety of the amount of crop that people have pre-sold or unsold, like what they're exactly doing. But what are some of the considerations they need to be asking themselves right now?
Well, I think the three initial thoughts that occur to me with the corn market, number one, this is still a weather market. So we got a rally in the spring based on some early concerns about planting and uncertainty. Now we're getting a sell-off based on ideas the U.S. crop is huge and great and wonderful. And by the time we get into the summer, perceptions could change. I'm not saying you're going to see a runaway bull market, but there is only a slight change required in the perception to cause some of the prices to swing the other way. So if you're a corn grower, I wouldn't personally, if you've sold some ahead, I wouldn't be dumping more into the teeth of this break. That's the first thing I'd say. The second thing I'd say, and it's more of a long-term issue or a mid-term issue, is that some of the issues that we're seeing elsewhere in the world, such as with the Russian wheat crop, suggest that over time we could see some more corn get pulled into feed rations in places like Europe, where there may not be as much wheat available. And so in the midterm, that's actually supportive for corn. So we don't want to get overly bearish too soon on the forever and ever outlook for this market. But the third thing I would say is that in a general sense, corn has come through a very strong bear market, and that began in the early part of 2022, the calendar year. And it appeared to sort of end this past winter. And now we've got this rally. Bear markets tend to resolve themselves more into choppy sideways trading ranges rather than new bull markets. So along with everything else, I think that is a message to corn growers that we really want to sell into rallies, but you want to keep pricing expectations realistic. As soon as prices start going up, you don't want to start thinking in the back of your mind, okay, we're going back to where we were in 2022, because there's no indication of that right now. What we're seeing is a transition out of this bear market that was in effect for a couple of years, and that's going to be a transition.
Yeah, on Dees corn, we really like it. Seems like the market kind of continues to test that. If you look at the last 6 months, like that 460 level, kind of where we are now, right? So that's definitely something to follow. And what I'm hearing from you there on those considerations is, over top of all of that, is you're speaking about discipline. And in order to have that marketing discipline, you really need to know your costs and where you're at on that, because that is going to assist you in applying that discipline that you're talking about. Correct?
I think that's accurate. I mean, there's the old saying that the market doesn't care what your cost of production is, but it is very important nonetheless to know your cost of production. And I think the way the marketing year is shaping up for corn, it is likely to be a fairly subdued pricing environment. So depending on your risk tolerance and your overall approach to farm marketing, you may be better off sweeping some money off the table through some forward selling when there is what you believe is a moderate or a small profit on the table, keeping a little bit in case there's a larger rally. But this isn't a year that's shaping up to be gamble and hope for the big home run because, as they say, you're likely to strike out.
Yeah, not a year for the hockey stick, as
Exactly.
As the fall of 2020 was for sure. We're talking to Ranulf Glanville from GrainFox. When we come back after a quick break, we're going to talk about a market where the real action is. It's called wheat. And we'll talk about it when we come back. You're listening to RealAg Radio, Rural Radio 147, Sirius XM.
Join us for the Canadian Beef Industry Conference, August 19th to 22nd in Saskatoon, Saskatchewan. Spend time networking on the trade show floor, hear from keynote speakers, and take in breakout sessions designed to increase profit, manage your rangeland, and navigate trends. Get up close to advanced techniques and hands-on demos, and kicking it all off is Lamley's Bull event. Proud, sustainable, and innovative, we are beef. Registration is now open. Visit CanadianBeefIndustryConference.com for full details and to register.
Canola is more than just a pretty face in the prairie landscape. It's a big business, both here and around the world, that requires you to be informed and up to date on everything it takes to grow a successful crop. The Canola School on RealAgriculture.com has an expert library of video resources covering markets, agronomy, and more to help you grow a healthy and profitable canola crop. Visit canolaschool.com today. Brought to you by BASF Canada and Invigor Hybrid Canola. It's summertime, and you've got a lot of important decisions to make when it comes to your corn crop. Let the Corn School on RealAgriculture.com help guide you through those big decisions with input from leading experts in the field. If it's spray timing, disease identification, or any other field issue, the Corn School's got you covered. The Corn School on RealAgriculture.com, brought to you by BASF and Pride Seeds.
You know, you deal with many uncertainties on your farm. Managing risk should not be one of them. MMP's ag team specializes in risk management. Seems like a good kind of environment to be thinking about risk management, to be honest with you. Visit mmp.ca to learn how you can stay ahead of the game and plan for the unknown. We're talking markets here today on the show, and we're joined by Ranulf Glanville of GrainFox. Make sure you check out GrainFox. Great service, providing a whole bunch of tools to assist you in making sure you're getting the most out of that crop that you're working so hard to produce through the growing season. Ranulf and Neil Townsend, his colleague at GrainFox, do a great job on the market analysis. Okay, Ranulf, I want to move to, and I kind of joke, this is where the action is. It's wheat. Should that feel a little bit uncomfortable?
Well, a little bit. There's, as an analyst, you don't like too much company, and you like to be in there saying, oh, I like natural gas because it's going to be higher 8 months from now. And the wheat market's one where you sit there and you look at what's happened over the last 6 or 8 weeks and you say, boy, there's a lot of company on the bullish side now. So yes, it does start to make me a bit nervous.
Yeah. Is wheat in a better fundamental position right now than corn?
I think the short answer is yes. If we step back and we look at the global situation, we have the ending stocks of most of the major exporting nations. This would be Canada, Australia, the United States, Russia combined. When you lump them all together and think about what are we expecting in the year ahead, there is some tightening there. So all else equal, that tends to create a bit of buoyancy, lots of unknowns on the demand side. But it looks like some of the crops, particularly in Russia, which has been a real engine of exports onto the world market over the past couple of years, it looks like that engine is slowing down.
How big is the problem in Russia? Because, when I read different reports, I seem to get like a different sense. And obviously too, I'm a little bit, it is Russia. So you're like sort of like China, you're a little skeptical sometimes about what the information comes out. If the information or the sentiment out there, the understanding is it's terrible, and there's actually a crop there that's really advantageous for Russia. I'm not saying that's exactly what's happening, but from your contacts and people you're talking to, you're talking about like a national emergency. What are you hearing?
Well, I think everything you just said is what we're hearing. And I think you're exactly right to be skeptical of what you do hear from the government of Russia, the government of China, some of these official sources. What we're hearing from people on the ground is the Russian wheat crop is probably in the low 80s in terms of million tons. Still very much a moving target and still some weather problems there. The weather forecast looks quite hot and dry for some of the wheat areas into the mid half of June. So there should be continued crop stress. In terms of what that means, it means that Russia probably has about 10 million tons less wheat to export than we thought they were going to have 3 or 4 months ago. Probably, again, about 10 million less than last year. So what does this mean? It means that although Russia may be tempted to declare a national emergency and say no wheat exports, and they have the power to do that to some extent because it is quite a centralized planning structure, it is unlikely that Russia would do that unless things really go downhill from here, because one of the great successes, if you can call it that, of the Putin regime is that it has been able to move wheat onto the world market aggressively over the past couple of years, despite the US sanctions, despite the objections of many of Canada's allies. The Russians have been generating hard currency by trading their wheat. So if they choose to keep the wheat in-house, they forego that, which could create many other problems for the Russians.
We have KC wheat, mini wheat, and Chicago wheat. Are all three of those grouped the same from a fundamental perspective, or are any of them different? Just maybe hit on that.
Well, there are relationships between the wheats, but they're obviously distinct. The Minneapolis spring wheat is more related to the wheat we would grow in Western Canada. The soft red in Chicago is very much related to the wheat grown, say, in Ontario, where you have the winter wheat. And then the KC wheat is somewhat related to some of the wheats in Western Canada. I think the thing that, from a fundamental perspective, if you look at those three markets right now, what we're seeing is Chicago, which is the most liquid market in the world for wheat, which is where all the speculative money is. It ran up very much in April and May based on fund repositioning, based on some loss of acres for soft red winter in the US compared to last year, about 600,000, I think. So plenty of fundamental support, plenty of technical support. The other wheat markets rallied, but the Kansas City market actually is now facing imminent harvest pressure related to the US harvest. So US harvest is underway in Texas and places like that. It's spreading north. I think roughly 6% or something of the crop was off as of Sunday. So over the next few weeks, we're about to hit the full stride of the US harvest, starting in Kansas City futures, the hard red winter, and then eventually moving into soft red and later into the spring wheat.
What about the Western Canadian crop? You know, we have a moisture situation's a lot better. Now, we're not out of the woods. I want to be, careful with sort of painting all of it with a big blanket, but probably a lot of analysts are looking into Western Canada and have been looking at some of the moisture that has happened and thinking, it's kind of similar probably to the U.S. corn crop in terms of the quality of what's going to be coming out of the ground. Is that fair?
Yeah, I think that's fair. I think both assessments are fair. I think when we sit back and we look at Western Canada, we want to be cautious, obviously, about penciling in a final yield. But the thing that we need to look at as of this moment is that the wheat crop in most parts of Western Canada is looking quite good in terms of being off to a good start. So that suggests that whatever your yield expectations were a couple months ago, we have no reason to doubt them. And if anything, they may be conservative based on the way things are trending with the crops. So we'll know a lot more once we get into, let's say, July with yields and so on. But right now, things are certainly off to a promising start. And I think also if you look at somewhere like Ontario, for example, where we now have harvest less than a month away for soft red winter wheat, what we now see for Canadian farmers has been a very, very timely run-up in the wheat futures markets and the cash markets as well, because it does present this opportunity to look at some sales to manage what you talked about a little while ago, some risk, because you have this rally and we don't know what the outlook is. So there is an opportunity there for some sales.
Yeah. So one of the things that's sort of trickled through my brain as I'm trying to get a handle on where we're at and not let emotion, come into play here. Should I feel good in my stomach about potentially being bullish wheat and bearish corn? Is that a safe place to be, Ranulf?
Well, I think in the very short term, that might be a bit of a crowded trade, as they say. A lot of people are quite bullish on wheat at the moment. If you look at a market like spring wheat futures, managed money funds have switched from being hugely short a few months ago to now being net long. So that doesn't mean anything other than a lot of people are starting to adopt a more bullish attitude towards the wheat market. Are there very real problems in Russia? Yes. Are the global ending stocks expected to tighten in 24, 25? Yes. But that doesn't mean the market is going to go straight up through the brunt of the US harvest in June. It might remove downside risk, no question. But I'd be a little cautious on the short-term outlook for wheat because some of the factors that I see as supportive, problems in Europe, like France has big problems with their wheat crop, problems in Russia, potential for downgrading of Ukraine. These are mid to long-term factors for the world market. So we want to balance our optimism about the mid to long-term outlook for wheat with a bit more of a cautious approach. And for corn, I think you can be negative about the short-term outlook, but we need to be aware that it's still June. So if you're going to take a bearish stance towards corn, you also run the risk that that trade figuratively or literally works for a couple weeks, and then we get into July and suddenly the corn market snaps higher.
Yeah.
So I'd be, a little bit, I'd view that a bit as a trade from a few weeks ago when everybody was bullish, the wheat market and running prices higher and higher every day. Now things a little bit more calm, I would say, on the wheat front, at least relatively speaking.
How should the farmer that's in the, there's 20 million acres plus of canola, we haven't mentioned that crop yet. How do you view that market with all of this, crop starting to emerge, and how should we feel about it from a marketing perspective?
Well, I think the first thing from a marketing perspective, if you're a canola grower, you're probably feeling pretty good about your crop in terms of it's in the ground, it's looking pretty good at this stage of the year. So relative to some years, if you're talking specifically about Western Canada, you're probably feeling a lot more optimistic about your production profile. We did get a very nice rally in the canola futures market, which took the November future up very close to that round figure of $700. I think it got up to $696.20. And then we saw the selling come in on Monday of this week, which was a combination, I think, of spillover pressure from a big drop in crude oil. We got the funds selling canola. We probably had farmer targets getting hit just under 700. So in the very short term, the canola market has taken a hit. It is holding up relatively well compared to a lot of other oilseeds. That's something to take comfort in if you're a canola grower. So I think you're going to get more opportunities to sell. You still want to sell into rallies rather than throwing canola sales into breaks as the one we're seeing this week. But at GrainFox, we're trying to balance the two. We've already advised selling some new crop canola, and then we're waiting for rallies. There's still a lot of weather-related uncertainty ahead, not only for the U.S. soybean crop, but also for the Canadian canola crop. And then we have many other things going on in Europe, which, lots of problems there too.
Yeah, absolutely. And like a crop like canola, similar to like when we talk about corn pollination, what's the temperature and what the conditions are, very similar to canola from a flowering perspective. We know that if we have intense high heat, and it's been cool across Western Canadian prairies, we are yet to really find true summer-like conditions for more than 3 days in a row. That's a factor that we still got to get through that piece of the growing season yet. So we are still very, very early. I think that's a great point. Hey, to wrap up here, one of the things we didn't mention was China or India. Of course, India, one of the big news items this week was the fact that Modi's not going to have a majority government. So that was kind of, and I would call that a shock for a lot of people who were following that election. There's been a lot of talk about China and some of their buying patterns of commodities, really focusing on Brazil and, of course, Argentina and not the United States. How do those two factor into this overall demand equation?
Well, I think China can basically be summed up as a country with a lot of potential. It has a big population. It has the potential to consume lots of food and other commodities, but which has generally been a disappointment post-COVID. And what I mean by that is the economic recovery in China after COVID has been very, very tepid, which means there's not a lot of incremental demand for anything right now. Perhaps the most telling thing about China is they're actually starting to export soybean meal because they don't need it to feed their hog herd right now. So this is actually quite a shift. And I would expect China to continue to import dribs and drabs of commodities in the year ahead, but no great boom for the agricultural markets. And for for India, I think really that is a pivotal country to watch if you're into the pulses and even if you're into things like wheat.
Yeah.
Because it does seem like regardless of which party is in power, India is going to need a lot of food. It has the world's largest population. It's expected to have a good monsoon season coming up, but that's not guaranteed. And they do seem to be short of some food staples. So I think that's one. Timing is always uncertain, but India remains sort of a reason for some optimism in some of these markets of interest to Canadians.
Well, Ranulf, I really, really do appreciate it. Great insights at a very, very important, critical time in the marketing season. So thanks for joining us here today on RealAg Radio. All the best to you.
Pleasure to be here. Anytime.
That is Ranulf Glanville. He is with GrainFox. Like I said, please check out GrainFox. Great service. Encourage you to do that. Hey, we're going to take a break here on RealAg Radio. We got more coming up right after this.
If you only listen to RealAg Radio, you only get half the picture. For greater insight into the issues that affect farming, tune in to RealAgriculture.com. Crops, livestock, machinery, farm management, and the markets, even food and travel. Real Agriculture Online digs deeper into the topics that affect the way you work and live. So get connected today. Read, watch, and listen to the people who know at RealAgriculture.com.
Choose Viatude fungicide and unleash best-in-class sclerotinia protection in canola and premium protection against white mold in soybeans. Viatude contains a powerful premix of Onmira Active and Prothioconazole. This unique combo delivers high-performance disease control, crop safety, mix compatibility, resistance management, and advanced mobility for excellent coverage and superior plant protection. Choose Viatude fungicide for stronger, more vigorous crops.
And welcome back to RealAg Radio here on this Wednesday. Let's get to some of your fan feedback. Yesterday we heard the Ag Policy Connection podcast, excerpts from that, talking about the future of ag extension and knowledge transfer. Okay. And there's a whole bunch of different ways for that to go. And the questions are, who's going to pay for it? What does it look like? What does delivery look like? There's a lot of things to be answered. And depending on, your background or how you see the world, you're going to have a different perspective on it. Indeed, it's a very, very important debate, especially as we see governments really kind of pulling back on extension, to be honest with you. So I got a couple notes here. Let's look at up first. I believe our first one was out of Alberta. Yeah, Wally in Alberta says, I listened to yesterday's show on the future of ag extension, and I really think this is something that long-term the taxpayer will only pay for if there's a stronger connection to food. If it's just to give farmers free advice, then the funding cuts will continue. Okay, Wally, so we need to Wally believes we need to make a bigger connection between that agronomic advice that the farmer's getting in the field, being the latest up to date on research and application of that research. We need to make a better connection to food on the table. If we don't do so, then the taxpayer maybe not be willing to pay for it. Then we've got Cam in Saskatchewan, who says ag extension is and should be the responsibility of the government. That is the only way farmers get a fair, unbiased opinion. This is a public good, and I do not want it privatized like everything else. It just means the farmer pays more. Okay, so Cam's got a different point of view. Cam's point of view, obviously, is that the taxpayer should fund it provincially or federally, and it's that unbiased third party that it's not coming from a company trying to sell something to you. So that's different than what Wally's saying. Then we've got George in Kansas. George in Kansas says, I greatly appreciate our land grant universities in the United States and the value they provide. Go Wildcats. Of course, Kansas State is the Wildcats. So again, a little bit of in some ways, a little bit of a different model in the U.S. where we do see a lot of extension coming out of those land grant universities, like, the Iowa states, the North Dakota states, Kansas State, whether that's on the crop side or the livestock side. Texas A&M, of course, provides a lot of leadership. So, yeah, a little bit of a different model in the U.S. A lot of that delivery is happening through those land grant universities. We do see this as well, though, in Canada. University of Saskatchewan, for example, Olds College, University of Lethbridge, I believe, even has a few people when the Alberta government shut down their extension area. Some of those researchers were dispersed to different areas and sort of not collectively, but sort of I guess flicked in a bunch of different directions. The question still remains, and I think I want to continue to get your feedback on it, and I appreciate the three messages we did get and those perspectives. Would like more of your feedback on this. What should the future of ag extension look like? Should the delivery be in the same form or fashion that we are used to? Should it happen through more of digital means? Should or is it a case of all of the above? You shouldn't be selecting a certain way to distribute it. You should be really trying to focus on all the different ways that people could consume extension information. And maybe the biggest question, maybe the most important question, before we even talk about distribution or what it actually looks like, is who pays for it? Who pays for it? Is that the farmer, the rancher, right? Or is it a public good and it's really coming from the taxpayer? Or is it really necessarily a combination of both? I think that's the fundamental question in many cases that has to be answered. So if you missed our show yesterday, I encourage you to download the RealAg Radio podcast. Or what you can do is check out the Ag Policy Connection podcast that is presented by Cappy. It is also, of course, hosted by RealAg's own Kelvin Hepner. Does a fantastic job with that podcast. It's a really important policy question going forward. Because if we don't have extension, right, we can do research. But if we don't have the extension to the primary part of the industry and that information, that knowledge is not being transferred and farmers aren't being helped in terms of how you apply that research, what's the point of doing the research, right? Implementation is kind of important when it comes to this topic. And just putting it like, hey, well, farmers should read the research papers. That is not how the world works. I'm like, not in today's attention. Like, the average person has an attention span of 7 seconds. Every time I try to sit down and read some sort of like highly in-depth research paper, I need a decoder ring, right? I need that extension. That's why we do shows like The Agronomist. That's why we do our crop schools, corn school, soybean school, pulse school. That's why we do them. It's knowledge transfer. It's extension. Wheat, peas, word. It's extension, right? There's lots of ways to deliver it. What does it need to look like and who's going to pay for it? Give me your thoughts. shaney@realagriculture.com. Okay, let's take a break. When we come back, we got the top ag news stories of the day. We got an election in India. We got a Bank of Canada decision and another scathing report about the federal government, this time in terms of federal interference in MPs in the election. Not good. We'll be right back right after this.
How's your seed quality? What should you treat with? What about herbicide carryover and environmental concerns? Spring is here, and you've got a lot of things to think about in regards to your pulse crop. The Pulse School on Real Agriculture has information and advice for all these questions and more to help you navigate this season. Brought to you by BASF. Pulse School episodes are available at pulseschool.com, realagriculture.com, or as a podcast on your favorite streaming service. Download the latest episode today.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomist, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomist with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
It's now time for the top ag news stories of the day here on RealAg Radio, and lots to fit in here. Bank of Canada has made a decision. They are going to cut it. They're going to cut the benchmark interest rate by 0.25 percentage point, lowering borrowing costs for households and businesses for the first time in 4 years. Man, time actually flies. And it's marking a turning point for the Canadian economy after the biggest inflation and interest rate shock in decades. The quote here from Tiff Macklem, he is, of course, the Bank of Canada governor. With further and more sustained evidence underlying inflation is easing, monetary policy is no longer needed, or monetary policy no longer needs to be restrictive. The highly anticipated move won't do much by itself, according to the Globe and Mail, to reduce monthly payments or mortgages, car loans, or lines of credit, but it kickstarts monetary policy easing cycle that should see interest rates fall further in the coming quarters, offering some relief to borrowers with floating rate debt, homeowners facing mortgage renewals, and indebted governments. And of course, the Bank of Canada is doing this before the Federal Reserve. Okay, people think the Federal Reserve will not start to lower rates until September. There are some analysts out there that are saying the Federal Reserve will not even lower the rates at all here in 2024. This does create some interesting opportunities for the movement in the Canadian dollar. Over 9,000 workers with Canada Border Services Agency will be in the legal position to go on strike as of Thursday, June 6th, tomorrow. The border workers who are members of the Public Service Alliance of Canada have been without a contract since June of 2022. CBSA says the border will remain open if a strike does occur, as 90% of frontline border services staff are deemed essential workers, but expect delays. Okay, that's and obviously also potential here for them to do work to rule, which is going to slow things down even further. Just think about all of the goods that are coming out of the U.S. into Canada. Okay, think about the CBSA workers that are at airports. And so obviously there's going to be some challenges here for the tourism industry for sure, but think about all the goods that are being transported. Think about, equipment coming north. Think about parts coming north, just to name a few. Okay, so this is going to definitely impact some of the timelines. This is added on top of already a potential rail strike that could happen in July. We've got some major challenges here when it comes to transportation in this country. Wow. These two strikes happening in parallel at the same time, it would really bring things to a real grinding halt. Very concerning. Canadian intelligence services have gathered information indicating some federal politicians are collaborating with foreign governments to advance their own interests, according to a new report. The Security and Intelligence Committee of Parliamentarians tabled a report Monday saying that it has been told some Canadian politicians are working with India and China in what may be illegal behavior. The body declined to name the politicians, and Liberal MP David McKinty, who chairs the committee, says it's up to the RCMP to investigate wrongdoing. And there really wasn't any sort of indication about which party the MPs were coming from. I think there was some assumptions here that these were Liberal MPs. I don't know if anybody really confirmed that they could be Liberal MPs. They also could be MPs from other parties as well. And this is a big time issue. And when they say it's up to the RCMP, then we know that this is really nefarious behavior by members of Parliament. Scathing report. Especially at a time where we're worried about election interference. This should create a lot of concern for Canadians in general. I'm concerned about it. I want to know what's going on, and I think the name should be released as well, or at least and if they do release the names, I think there should be a context around that as well. To be honest with you, as far as what exactly did this look like. Indian Prime Minister Modi was set for a historic third term on Tuesday, but with a vastly diminished majority and a rare electoral setback for a leader who has held a tight grip on the nation's politics. Of course, we talked about this with Ranulf Glanville earlier in the show. This is a real surprise. He's got to form a coalition. This does reduce his power somewhat. We'll have to see how he functions without a majority. Some talking about how, the concerns about his, really unquestioned at times. There's concerns out there about what his opponents see as the country slide towards more of like more of an authoritative kind of government. He's been in power for 10 years already, which I would have taken the under on that. I thought it was a little bit shorter time, but again, definitely a concern. Plans to triple global renewable energy capacity this decade are not in line with the goals agreed to at the COP28 summit, according to the International Energy Agency. Even if all countries were to fully implement their current ambitions, the world would fall 30% short, the IEA wrote in its latest report. The 2030 goal is a key factor in the target of achieving net zero emissions by mid-century and limiting global warming to 1.5 degrees Celsius. It comes as delegates convene in Germany for climate talks this week, which will influence the major decisions to be made at the COP29 summit in November. And this falls in line, if you're critical of things like the COP meetings, there's a lot of bluster, there's a lot of numbers being put on the board, there's not a lot of implementation. And this is one of the arguments that Canadians have when it comes to things like the carbon tax, where it's like, why are we actually making any sort of a difference here? And there's a lot of criticism right now of and talk about what has been the cost to Canadians of that carbon tax. Never mind what some of where the lack of actual impact that tax has had on Canada's ability to lower emissions, if at all. Farm Bill in 2024 in the U.S., well, maybe don't count on it. Congress is facing potential delays in renewing the Farm Bill due to disputes over SNAP benefits and climate policies, the Washington Post says in its Farm Bill update. The $1.5 trillion proposal set to expire on September 30th typically garners bipartisan support by combining resources for food assistance programs like SNAP with farm support such as commodity prices, guarantees, and crop insurance. Well, this year, however, the Republican-controlled House and the Democrat-controlled Senate have conflicting priorities, and we still haven't really seen any text out of Senator Stabenow. And this continues to I know Jim Wiesmeyer from Pro Farmer was on this show last week talking about how maybe it's the lame duck. Post-election, the lame duck period post-election is where we maybe do see some movement. One of the flagships when it comes to plant proteins, Beyond Meat, is in trouble. Beyond Meat, which experienced a meteoric rise when it went public in 2019, is now facing significant challenges as sales decline and concerns about the healthiness of the cost of plant-based meat grows, according to an article in the Los Angeles Times. Despite initial success and widespread adoption, industry sales have fallen, with Beyond Meat's net revenue dropping by 25% to $343 million in 2023 and continuing to decline in 2004. Sales of plant-based meats and seafood fell 12% in aggregate in 2023, and Beyond Meat stock has plummeted over 90% from its peak in its cash position, prompting discussions about raising funds through debt or equity. So not good for plant. That doesn't mean there's no future for plant-based proteins, but Beyond Meat, the flagship, is really in trouble. If you have any feedback on today's show, we'd love to hear from you. Send me an email, shaney@realagriculture.com. You can also call the RealAg feedback line, 855-776-6147. Thanks, everybody, for getting real and getting connected with RealAg Radio. We'll chat again tomorrow. Cheers, everybody.